Hi guys, my name's Jeff Gibby. I'm the Business Development Manager here at MetaStock. Thank you for watching the recorded sessions of our online trading summit. If you're interested in MetaStock, you can get a 3-for-1 offer at metastock.com/traders-summit 3-for-1. Enjoy the video. Let's go ahead and talk a little bit about Price Headley. Price and I worked on and have been friends probably for like 10 years, I would say. It's one of the first projects we kind of undertook here. Price Headley is a Hall of Fame trader. He was inducted into the Traders Hall of Fame in 2007. He also, in addition to that, has been rated many times in Timer Digest as being a top market timer. And he can tell you more about that. I want to get the time over to him. I don't want to spend too much time introducing him. I want to get straight to the content. So let's go ahead and bring you on here, Price. And I'm going to go ahead and unmute your microphone. Hey, Price.
Here we go. Hey, Jeff. How you doing?
I'm doing good. How are you?
Oh, fantastic. And good morning, everybody. Glad to be with you.
You're lucky. We got our technical glitch out of the way for the day.
Knocking on wood loudly. Okay.
Let's go ahead and make sure we can see your screen this time around.
All right.
We have a great crowd today.
Yeah,
lots of registrations. Record number of registrations this time around.
Beautiful.
I can see my top 3. It came through perfectly.
Fantastic. We ready to roll?
I'm going to just get out of the way, man.
All right,
We're going to get
Jeff,
back on schedule.
I am so thrilled to be with you all, everybody. Jeff, it's always a pleasure to work with you and the entire gang at MetaStock. And so good morning, everybody. Like Jeff said, we're going to roll right into it. A great presentation from Rob, and as Rob said, a lot of other great speakers as well today. So just encourage you to try to, when you really get through the entire day, really try to circle in your notes the one thing you really need to work on that really resonates with you the most, and focus there, and then you can keep building on and adding to it, because there's so much great information. You've got to kind of get focused at the end of the day about, okay, where do you go next to implement what you need to work on first. So, one thing at a time, and keep building from there. So with that in mind, we're going to talk about my top 3 technical analysis indicators that I really like to use, that I've been using for the last 25 years of my trading. I got started trading in 1990, fresh out of graduating from Duke University, and thought it seemed like a pretty easy game, and paid those early lessons, those early tuitions to go ahead and say, okay, what was not working. So that was probably a blessing, because sometimes probably the worst thing that can happen if you're new to trading is you start winning right away and say, gee, I should have quit my day job earlier. Bottom line is it takes a lot of work. There's a lot of smart people out there trading, and so your job is to figure out where do you get an edge. So we're going to talk about the top edges in technical analysis that I've learned in the Big Trends way over the last 25 years. Just a reminder, of course, quickly, that everything we share with you here today is for your information and education only. Nothing I talk about here should be considered a specific recommendation to buy or sell any particular security. I'm always concerned that you're going to see an idea, because I'm going to share with you some scan results from the MetaStock add-on from Big Trends that we have at the end, and but I don't want you to take those and then make mistakes about not knowing how to get out. So just soak that in for educational purposes. Ultimately, of course, you know that you are solely responsible for your investment decisions. And so the bottom line is that make sure you consult your tax advisor before you make any investment that might impact your tax situation too. The goal here is really to focus you on education. Education is really what everything is about here today, really zeroing you in on what's important and getting you pointed at the target. You have no chance to hit the bullseye here if you're aimed off in a different direction. So we'll talk about education today, but we'll also talk about the exploration with the scans that we can do. Now I'm going to jump right into my first key indicator that I like to follow, which is the acceleration bands here. And this is the technique that actually allowed me to really launch Big Trends. I'll show you one of the stocks that really launched Big Trends for me here in a minute. But what we're talking about with acceleration as trend traders is we really are looking for speed of movement, especially when you get into options trading. And yes, Bobby, I'm a CFA charter holder. That's a chartered financial analyst, also a CMT, chartered market technician. So very honored to have both of those designations. But fundamental and technical analysis is what that means. They're both important. But what we're talking about here is speed of movement is what really matters, especially with options trading. If you're going to get into leveraged vehicles, you're looking to get that bang for your buck in the least amount of time possible. And so we're talking about not just slow trends, we're talking about bigger trends here. And like I said, I started in 1990, and like a lot of you, I started with moving averages. And moving averages are fine to show you generic directions of the trend. But there's a couple of problems with moving averages I have, especially when it gets into scanning and choosing your trade selections. One of them is how many ideas you get. You're going to get way too many ideas if you run just a moving average crossover scan or moving average breakout type of scan. You're not going to know where to start because your list of potential candidates is going to be so long that you're just going to say, well, that's way too many to look at. The other problem is that the best stocks, the ones you really want to trade, and we're going to mainly talk stocks here in the overall. We're going to show you my S&P analysis as well here before we're done. But you can use this on futures and Forex and ETFs and whatnot too. Best stocks, though, don't come back to test those same moving averages during a good trend. They only come back to test that long-term moving average after the trend is breaking. And so I know a lot of swing traders and active traders with us here, and we want to focus on that. And by the way, I do have my lead consultant in with me today, Chris Sayre. He'll be helping answer some questions in the chat box over the course of this hour together. So what I studied was what are some different ways, like adaptive bands. I know everybody's heard of Bollinger Bands. John Bollinger had a great idea to test standard deviations and really track a band around a moving average based on volatility. I like that idea. It's really good in trading ranges. I found it wasn't as helping me to stay with the trends, though, that I was looking for. So I created this technique called acceleration bands, which accounts for both volatility and trends. Okay, so trends is something that I want to be able to stay with when it's working. Okay, give myself a chance to ride, and then go from there. Now, the interesting thing is an acceleration band, kind of like a 2-deviation Bollinger Band, should encompass about 95% of the price action here. And so if you think about it, that's what's expected. So what I'm looking for is the relatively unusual events, or the quote other 5% of the time. Now, they actually happen in an individual stock more than 5% of the time. We've tested it to be happening about 3 times as wide as what the market expects. These are called the fatter tails than what the market expects. So they're happening maybe 15% of the time to the upside and downside for a major move potential over the course of time. Okay, so you say, well, that still doesn't sound very likely. Well, the beauty is you can use tools like the Big Trends Toolkit from in MetaStock to actually go find which stocks are in their good trend phase and leave the dead periods or the choppy or more uncertain periods alone. It was George Soros actually who talked about this in his book Soros on Soros, where I read a lot of books, and I encourage everybody to constantly learn. That should be a lifetime value that you should have, and a principle is you're not done when you get out of school. You should, and that's why you're here today. So I applaud you for continuing your education. It's all about lifetime looking to build your skills, build your knowledge, build your edge. But he said in that book Soros on Soros, it's where he made the most money, like when he broke the Bank of England with $1 billion gain shorting the British pound. So that's fat tails of the distribution. That's what we're looking for. Now, I'm going to talk about current charts in a minute, but this is one that really helped us launch Big Trends. I launched Big Trends back in the middle of November 1999, and I was telling people, look, CMGI is a great buy. What we're looking at here is an acceleration band. The upper and lower bands are plotted around the midpoint, which is a 20-day simple average. And what we're looking for is not one, but 2 closes in a row outside of that band. So once you get that, we then buy the next bars open, which happens here on that next open, and you can see that then the thing just launched into the stratosphere. And what was funny is that people told me, and you can see our exit used to be when we violated back inside the band. Now we use a trailing moving average to kind of avoid some of the more noisy markets whipping us out of an overall good trend. You can see here the next one went 1 out at the start of 2000 and then 2 back in. So X marks that it did not confirm that breakout here. And then it went, what happened, CMGI not only went back down, but it actually crashed back down to nothing. So we caught the move from the mid 60s up to the mid 130s in a matter of 6 weeks, and said thank you very much, not just for stock traders but for option traders. It was a beauty. On the downside, you know about the collapses in 2008, and everybody talks about Lehman in the fall of 2008, but there were a lot of other dominoes that happened and triggered earlier, and one of them, of course, was Bear Stearns. Bear Stearns, you can see we're showing %R signals on here, but you can actually see that 1 and 2 closes under the lower band back there in early March of 2008 actually was triggering this cascading effect to the downside. And you can just see how, it's interesting. Bear Stearns, the prior Friday before it collapsed, finished about $30 here. You can see that everybody was making rumors that Bear Stearns was in trouble, and then over the weekend there was news that JP Morgan was buying them out, and it said they were buying them out for $2 a share. And I thought, that's got to be a typo. I kept hitting the refresh button on my computer thinking maybe it's $20 a share, but no, they were offered $2 a share when the prior Friday it was at 30. And you know what happened? It opened about 3.5, and then eventually they had to raise their offer to about 10 and bumped it back up here. But guess what? You can just see the downside move was from 69 down to 3.5. That was a 95% drop in the stock in a matter of about 7 or 8 trading days. So the bottom line is we're looking for those big moves, and you can see even if you catch just even a short window here on the left side there at the start of '08, you can catch some fairly quick opportunities to get a first profit target and then go from there. Now we're going to kind of focus on a couple principles here before we get into some other charts, which is I've been criticized as trading the bubbles, that, oh, you're just trading the bubbles, that seems higher risk, okay? And I always think it's funny that those who say the word bubble, if you ever notice in the media when they're using the word bubble, they're usually criticizing a big trend in motion. And who uses that term bubble? It's usually used as a negative term by those who missed it. They've missed out. They're basically on the outside looking in saying, this thing's just really crazy. We've all had that opinion about a chart, right? Do you think there's just no way that can continue? But what the acceleration bands indicator allows you to do is it allows you to spot when it's just starting to surge and that bubble's just starting to inflate. Okay, so we want to be on a big trend to the upside when it just starts to inflate and accelerate. And it also tells you when that bubble's bursting, so that you will see that stocks that bubble up will also bubble or burst down, right? So yes, bubbles eventually burst, but the principle is trade them while they're there, and then when they're going the other way, trade them the other direction. You never fall in love with one of these stocks like CMGI because when they crash hard. So you want to stay flexible and be able to trade that. So what kind of stocks usually fit this profile? They are usually growth-oriented stocks. Okay, so we're not so interested in the choppy sideways, boring type of names. We're much more interested in names where there's a lot of change, where there's a lot of up and downside movement. So you got tech, you've got biotech, communications, medical, health, and then just generalized growth, like, momentum stocks, a lot of people might call it, whether it's Netflix, Amazon, Google, now called Alphabet, or others. One of the big principles here, when we talked fundamentals earlier, the fundamentals matter, they do. The big fundamental to me that matters is earnings. Earnings, in particular, earnings reactions are really, really important as it relates to what's going to happen to a given stock. Because, of course, stocks are valued based on their essentially their estimated value of their future cash flows, their future earning streams. So the faster those earnings are growing, the more that stock's going to go to the upside. When that's been factored in, the stock starts slowing in its earnings growth. It doesn't have to go negative in its earnings. It just starts slowing, and you see a lot of these growth stocks take a big hit. But you're usually seeing these in the mid to high double digits and sometimes growing at even the triple digits in their earnings. The other thing I like to see, especially in a prevailing trend, is some kind of debate, some kind of skepticism in an uptrend, or some kind of hope in a downtrend that things are going to turn around. When that exists, then you can often see that the trend's going to continue until everybody jumps on board. You think back to the tech bubble at the end of the 90s, even as late as 1997 and early 98, people were skeptical on Yahoo. They were skeptical on Microsoft. They were skeptical on AOL. And those became, still bigger winners until everybody seemed to convert into the Y2K, end of 99, beginning of 2000, believing that now that Y2K was over, everything was safe. Guess what? It was exactly the opposite. It was very risky as we started the new millennium. So, you'll see words like overvalued or overbought thrown around, and I often found that stocks get more overbought, more overvalued until you see the rest of that crowd jump on board. The other thing is that you often want to see these stocks breaking out on an upside play, for example, to a relative new high. A lot of folks that are stock investors are trained to try to buy stocks near their 52-week lows. That is a recipe for losing, especially when it comes to options buying and options trading into stocks that are really going to give you your major move. The studies I show that more than 80% of the leaders for the next 12 months were within 15% of their highs when their upside breakouts began. So these are ones that maybe they take a pause for a little bit, then they go. So you don't want to try to buy the lows. Those are actually stocks that I'll look to trade the downside for the next leg down. So you look at a stock like Google in the past here, now called Alphabet, and what I've plotted on here actually is a Bollinger Band. You can see in the red line here, those would be a 20-bar Bollinger Band. Okay, so I'll put a BB by that, and then you can see in the green we've got the AB, the acceleration band. Okay, so we're really looking at this one at the upper two bands for Bollinger and acceleration. And you can see, look at the crossover point here. When we get our 1 and 2 bars outside of the acceleration band, notice how the Bollinger is racing to catch up. And it actually stays outside of that Bollinger band for a few days, right, when we're getting that initial buy signal there. You notice, though, that once it kind of settles a little bit in here, that it kind of flatlines a little bit, and the Bollingers keep racing to catch up. Now you almost have this envelope where Bollingers are staying outside of the price action to the upside, but look at what's happening with the acceleration band. It's staying underneath it, and like I said, we now use a trailing moving average, which I didn't show on here, but basically that trailing moving average, if I was putting a dotted line, would look something like that, and it would be violated when we close underneath it, which would give us the sell signal at this point. So obviously when you look at this chart, you say, well, that's where the action was. I do get people who often tell me, well, you know what, there was some support down here at the lower band. Why didn't you buy your lower acceleration? Then you could have sold up near the upper acceleration of Bollinger Bands in that trading range. And yes, you could have, but my problem there is that oftentimes those moves are slower. They're not as perfect as what it looks like on that chart on the right side there. So the easier part of the trade, and we're going to show you what's happening today, Rosa, before we're done. I'm just laying some groundwork, but the easier part of the trade is the trend trade. So understanding kind of that's your core understanding of acceleration bands. And these are my top 3 indicators. So I'm giving you some groundwork so when we look at the current charts, you'll understand what you're seeing. Now, percent range, we're going to talk about that one, and then the third one we're going to talk about is the Commodity Channel Index, or CCI, as well. These are normally oscillators. What's an oscillator mean? By definition, it means it should be doing something like this, right? A squiggle back and forth. But what we're going to see is that when we see something go overbought, we're going to actually be looking for when it stays overbought. Those are the biggest and strongest uptrends that you need to find a way to get a piece of. And a big part of my method of big trends is not just finding the first breakout, but it's finding the retest, the low risk entry point, and not just a lot of different squiggles on a chart, but actually what are the critical inflection points where you're likely to see a stock hold its support buy a dip in an uptrend, or whether you're likely to see a stock stop at resistance. And so again, when the stock's breaking down, we're going to look to sell those brief little bounces for the relatively weak trends as well. So with percent R, Larry Williams developed it, the percent range indicator, and a lot of folks use that with a very short setting, like 10 or 14 bars. Larry had a negative scale, 0 to minus 100. I use a positive scale, 0 to plus 100, what I call the grade school scale, just a little more intuitive to me. But a lot of people use Williams to trade those reversals, to trade those kind of oscillating points back and forth. What I find is that actually when something goes overbought, in my definition of above the 80 level here, that actually can signal a trend if we get the right configuration and pattern here. And then the key, every trade that you make is based on a belief. As a trend trader, my belief on this bottom line on the right here is that stocks can remain overbought or oversold for long periods of time. Whereas a reversal trader is going to say stocks don't remain at those levels very long. Okay, so there's a difference in belief. And to me, part of that comes from if you're trading in a trading range, then yes, reversals work really well. But if you're trading in a trend, if you try to sell an overbought market in a trend, you've probably had this happen. You will pay a very steep price as it keeps on going against you, right? If you try to sell, when this thing first starts going overbought here, we've got the kind of classic Williams percent R on the bottom panel here versus our modified version up in the middle panel there. You can see when it goes overbought right there, it then closes above that high. That's what we call bullish confirmation. So I would put a circle on that next bar's follow-through point. It happened even before our then acceleration bands, which were 1 and 2 bars outside of there, about 4 days after that initial percent R buy. But look at how long it's staying overbought in here. And then you see what happens. It comes out of that overbought territory. You think, okay, so that's got to be where you sell it, right? And I would say, no. That's where it becomes what I would call an inflection point. At this bar's low right there, we would say that's the critical point. If it closes below that bar's low going forward, you will stop out of that trade. That's the rule. But if it holds, you've got a wonderful buy the dip opportunity, and you see in this case for GE, it snaps back up. Now, the next one, you see it does another retest like that, and then it violates the next day, right? So if you buy that, the next day it closes below it, you've got to say bye-bye to that trade. At that point, it's back into the range. Anything can happen. You see it bounces up into the top of that range, stops, and then comes down to the bottom of that range, and notice then it eventually actually breaks down to the downside. So then it sets up a little bearish opportunity. You see the Williams percent on the bottom is a little bit more kind of choppy. It does catch that one upside period, although when this one gives a retest where we got it, it would have stopped you out the next day. So the shorter term setting's a little bit too noisy. It'll create too many whipsaws for trend traders at least. So what are we looking for? When I look at confirmation, what I'm saying is I'm not just going to buy when it first goes overbought because it could be the top of the range and it could stop. I'm looking for greater consistency. I want to try to minimize or avoid as many whipsaws and fake outs, if you will, and find the true breakouts. So what we're looking for is a filter to get rid of a lot of the bad trades, the false signals, and get on the more meaningful signals. And so I use a two-step approach. One is seeing that first setup point where we want to then say, okay, it's in that mode where it could follow through, but I don't want to pull the trigger yet. Then I look for the follow-through point to say, prove it to me, stock, prove it to me on the upside or prove it to me on the downside. And then when I get that confirmation, then we've got an action point. So the trend could be developing, but there's a temptation. This is we all deal with temptations in life. The reality is that in trading, the temptation is you feel like you've got to rush in to a trade. You feel like you've got to do something every day. You know, you feel like you've always got to be taking some kind of an action. And part of being a good trader is first being a good observer and being aware of where you have an edge and where you don't. If you don't have an edge, why would you make a trade? Because you do have to overcome, you know, your commissions, your slippage within the bid and the ask. You need to make sure you've got enough of an edge to make a positive expectancy for yourself over time. What I find is that the best trends display similar characteristics. Like I said, people told me after the tech bubble crash, oh, well, we'll never see trends like that in our lifetime again. Well, you've seen it with the real estate bubble and bust, now coming back again. You've seen it with gold, big run throughout the 2000s and then crashing down a few years later, and then now coming back up this year. We have got a gold chart here in a few, and then basically we're looking at where these criteria play out. So again, we're getting obviously the bull market in stocks that you've seen in recent years. It's playing out again, and that's the thing. All these trends go in cycles of boom and bust and fear and greed, and that's our job, is to take advantage of it. Now, you see the initial breakout point on this chart. This was for ICE. You know, when we're getting that initial surge here and it's going over a bot, then of course it follows through and it closes above that. Remember, the close is the key word there. I don't care about a trade on a following day through there. What I care about is, does it finish? Whether you use a daily chart, an hourly chart, or whatever time frame you like to use, you want to see that confirmation. So the initial confirmation there happens there, then we got an exit, and then it did get you back on the horse on this one here when it followed through above that bar's high right there, okay? So the next bar gives you that buy. But what I want to show you in comparison is, look at, hold on, let me actually show you in comparison. Look at the retest mode, how many times you got retests here. Okay, so we've got a first retest here. We'll just put a number by it. we got a first retest, a second retest that actually holds on a closing basis there. We'll put in a 2 by the retest there. Third retest happening on the dotted line right there. So there's your third one. And right behind it, there's a fourth one. Okay, so you know what this means is that when you miss that first buy signal, it's not over on your potential participation in that trend. You can see all these points here at which you're getting retests give you multiple opportunities back into the trade. So my point would be is that don't give up on a prevailing trend here. You can see here that 6 times you had retests that worked, and then the 7th time it didn't work. Okay, so on the 7th time, the trend rested, right? But basically, you see, the point that I would make is that, yes, you were right on 6 of those retests and you lost on the 7th. So that sounds pretty good, right? Right more than 80% of the time. But what I would point out, too, is that when you missed on the 7th, you didn't miss by much. So the beauty of this method is that when you're wrong, assuming you follow the rules properly, and when it violates, I don't care if it violates by even a penny. If it violates by a penny, I'm still out. I make no rationalizations or excuses for why I should still stay with that trend. So when that happens, we get a situation in which we really want to focus on. Okay, let's get out. Let's follow the rules. That's your first job as a trader. Whatever system you use, or if you're using someone else's methodology and adapting it for your own trading, you name it, make sure you follow the rules. Okay, now you see on the next buy signal, we get another retest happening here, and I'm marking up this chart a lot, but this is the beauty of this too. You see another one happening right here, right after that second buy signal. Now, that one came within the acceleration band, so what I would do is I would actually say, go ahead and exit up here when it hits that resistance of the acceleration band from underneath. That's a pretty good rule of thumb as a target, and you can see even back before how many times you could have taken some profits out after a retest into that resistance and really booked a nice part of your profit right there. So bottom line is that, yes, a trend will end. You see the next time it retests here, we're going to get an exit on the second retest, and you're going to lose 2 days later on that second retest. My job is as a not just a trader but as an educator for now more than 2.5 decades, or the last 26 years that I've been trading and teaching, is to remind you that there will be losing trades. Anybody that shows you how perfect they are, you probably need to back off and say, look, let's get into some reality trading and not into fantasy trading. Okay, when there are losing trades, learning how to take a loss properly and move on rather than trying to adjust and continue to put more good capital after bad. Let's identify the loss, let's move on, and let's get ready for the next opportunity elsewhere. Okay, now on the downside, you can see here's Family Dollar, FDO, we lovingly call FIDO. Basically, the bottom line here is that you can see here that you got the first breakdown in this chart back here off of this low, and then it closed below it about 3 days later. We want to see that happen pretty quickly, and so we make sure that we follow some tight rules about it needs to happen in fairly short order. But there's your bear retest clicking right in there right after the 21st, right into that rally. Now notice, if you use a retest method here, you're getting a really good entry point, and it's happening off of a big up day. So you have to train yourself that, on retest, you're going to be sort of buying when everybody, or in this case, selling when everybody else is buying on that day. But you're factoring in the bigger picture view, and you're not getting hung up here. The moving average in between those bands, Charlie, is a 20 bar simple moving average. So basically, we keep a last month's kind of view on a daily chart, a last week's view on an hourly chart, whatever is appropriate for the given time frame. Now you notice by the time this one then ends its trend there, this one took a couple months before it ended, so that was a really long trend. Although on a big gap like this, I would always say on a windfall gap in your favor, take something, at least a partial profit off the table. You don't have to take it all. A lot of people want to rush and take all their profits these days way too quickly. I think it's important to give yourself a chance as a trend trader to let the trend run. But look at when a trend then sets up and it doesn't follow through, like back here in June. See how it's hitting that oversold level and it's not getting through there. When it flips back up out of that oversold mode, you're basically saying, okay, turn that off. That didn't follow through. That doesn't count. Same thing on the way up. See how it's spiked up above, 1 bar above that acceleration band, couldn't follow through. No, thank you. That's still the top of the range. Well, why not trade that? Because you're not ready when it then, if you try to buy the bottom of the range when it starts to come down here and then it breaks down below there, you're going to get your head handed to you if you're not careful. So you can see the next big trend to the downside kicks in. Now, I promised you some updates on the current market. Okay, so this is the SPY. Okay, just pulled it this morning off of my MetaStock. So SPY daily. Okay, that's what we're starting with here. And the markets took a beating yesterday. Bottom line is that you can see, based on these methods, of course, the last time we saw a potential sell was right around the reaction to the Brexit, the British vote to leave the European Union, and you can see that was a bad signal. It did not follow through. It surprised a lot of people. We had some mild bearish bets. We didn't go heavy on that because we were still above a lot of the longer term key support for the market. We were actually right back into this key 200 level, roughly about 2000 on the SPX. So it was really crunch time right there. If we had kept going there, I predict we would have cratered down, but we didn't close below that low, and so therefore only got some partial exposure to it and then stopped out of it a couple days later right here. Okay, so that happens. But my point would be, look, then you got the bullish breakout to the upside, and look at how long that market stayed overbought in here. You can see it staying overbought after that buy signal that we had on the S&P coming out of that overbought mode. And then also intraday, we're even getting some bullish retests there. But you can see this last one gave an exit. So here's a great example. I just did my midweek video this past Wednesday, and I told my big trend followers, be careful right here. Why? Because we were just going overbought. I said, unless we follow through above that resistance, we've got a problem here. This is the top of the trading range. It's not a trend anymore. So from this perspective, and BTTK is our big trends toolkit, Catherine, for MetaStock. So we'll get you more information on that a little later. But bottom line is that yes, now you see, okay, so the market tanked on Friday. Should you go bearish here based on what I've just shown you? That's one bar below the acceleration band. That's actually the first time we've gone oversold now on this chart. That's what we call the bear setup. So it means that we need to actually close below this low if you're following it on a daily chart on Monday or in subsequent days while we stay oversold in order to actually get some follow through downside, really potential true downside acceleration. Now we can zoom in a little more. I know we've got a lot of shorter term traders with us. Here's your 60-minute chart on the SPY. Okay, so this is your 60-minute. So from that perspective, you say, look, 60-minute, guess what happened right as we broke down to start off the day yesterday morning? There's your first one down, and then there's your second one down on the acceleration bands. That was also your first key low. We closed below it in the second hour there's close, which is at 11:30 Eastern. And we can tighten this up even to, we will in the next chart, to the 15-minute. Notice also, I haven't talked about the CCI much yet. The CCI is a commodity channel index. Part of the reason I use that is that when I get a percent R signal, I like to make sure that it's got enough thrust or power to it. And that's what CCI shows me is, do we get the same kind of confirmation? A lot of times CCI will save me from some slower trends that may not be developing yet. So you can see here, in this case, that we got the breakdown, then we got the continuation to the downside, and it just kept on pouring it on the downside. And now you can see again, look at this 15-minute chart. So the 15-minute chart, same deal here. You can see we're getting the gap down, first bar down below, then the second bar down after. And this is a 15-minute, okay? So from that perspective, when we factor that in, I just try to maximize the screen so you can see it better. That breakdown and then the percent R and the CCI both confirmed the sell. Look at how it stays oversold all day. Okay, so we can put other short-term oscillators on it to find other entry points, or you can even go down if you wanted to, if you're a day trader, into even shorter time frames to find other retest points. Notice how it got back into the acceleration band, even got it back above it a little bit right there in the final hour, but didn't actually ever violate the steady downtrend we're seeing in percent R and the CCI as well. So that's an example with the overall S&P where we say, yes, you got a beautiful trade to the downside Friday, and for now it's still set up bearish. However, here's a point I would make as you come into Monday and the start of this next trading week is I would now, if I'm on the outside looking in, I would wait until you see percent R do one of these where it spikes up into this next retest area here some point on Monday. It'll come in some kind of a bounce. Now it could come later than if we gap down initially Monday, then it could come a little later after it snaps back up. If it gaps up early, then that would probably set up our good short-term low-risk entry. Again, just consider these things as it relates to how you configure your trading. You don't want to be reactive like everybody else. You want to be proactive. Now, let's talk about one we've actually liked over the last couple months, and this is Bank America, BAC. And in Bank America, again, there's a lot of negativity about some of these banks from the whole fallout from 2008, but it's been one of the strongest sectors on the board. And you saw we got our first buy signal here on percent R as we broke out above that resistance in here. You see it closed above it, and then so we're buying right into that close above that band. But you can see also, look at if we put a blocker on the retest is happening right into this low here, and you're saying that's the kind of opportunity. If you miss the buy signal, you can get some nice follow through. Notice also the CCI breaking out then right after that, and then coming in for its own little retest right as it snapped into that lower plus 100 line right there at that low. You'll see sometimes where if you buy right into a CCI, this is a CCI retest on this one here, the second one, is when you see that happening, the next 2 days it traded below that low, but it did not close below that low. We see that all the time. We call that a bend but not break, bend but don't break pattern, and that's kind of taken from the idea of like a sports event, like a football game, where the defense gives up some yards, the offense is driving down the field, but the defense manages to not give up any points. So if you think about it, who's playing offense and who's playing defense in this particular chart? The Bulls are on offense, and the Bears are definitely on defense. The Bears are getting hurt as the Bulls continue to march the ball down the field. Now, from this perspective, you also see it did give another retest coming in here on percent R right into this low. What's amazing is that even with the pain caused from the sell-off yesterday, Bank of America still didn't break that low point there. I'm not telling you it's a must-buy yet because basically now I'm going to show you something else, which is we would tie in the 60-minute chart with it as well. You can see that actually on the right, you can see it just hit overbought right there, and then it backed off, right? So we just went overbought, and then we failed to follow through. So that one would be an X marks the spot. Don't take the trade as a swing trader. We took the trade back during this window here. You can see, look at the difference, and this is where I want to show you CCI. So percent R gave a buy signal on the left side of the chart here, right? So percent R is giving you a buy, but look at what's happening over here on the CCI around that time. It's not above the plus 100. In fact, it doesn't go to plus 100 until you can see right into this resistance right here. So then it doesn't close above it. We get a few times where it's hitting into resistance and not following through here. So what does that tell me? It tells me that there's another one there, and then there's another one right into here. But it tells me not to buy it yet. Where it tells me to buy it is when it surges outside of plus 100 off of this gap up, and then eventually, it takes it a while, but it does then break out through there. So now CCI in this area around the start of the day on the 24th is telling us you've got a buy opportunity. So we bought it for our option sharks, one of our alert services that's a little more aggressive and buying options and basically taking advantage of that trend up. And you can see, again, just like a percent R, how CCI stays overbought through this window through the latter part of August. You can see once it starts to give it up there August 31st and then breaks that low by even the slightest amount, now we're seeing sayonara, this thing's losing its momentum. And since then, you can see it's been chopping back and forth. So it's all about finding a window of opportunity here where even though the CCI and the percent R show you, of course, multiple retest points, you could hop back in on that trend as well. That the point would be that, yes, we want to make sure that we are focused on, okay, where's the directional edge and where do we back off? I mentioned gold. Gold's another one that the big gold trade, of course, happened earlier this year. You see not just percent R, but also CCI confirming that breakout happening right here. And you see there's your acceleration band breakout as well. And look at what happens. Parabolic kind of trading opportunity there. Remember how I said before, in options trading especially, you're looking to get maximum trend in minimum time. And so from this perspective, we're catching that window, and then there's still more opportunity to come. But that speed of movement window was best there in late January to early February. You can see we've had a few other opportunities, including the one that happened back here a couple months ago, as you saw that July breakout. But bottom line is that you look at it now, we're in Chop City, right? You see we're in that no man's land, as I call it, in between the overbought and oversold threshold. So we actually would say no thanks to that type of a situation. And then the other one I wanted to point out was volatility. This is VXX, okay? So if you track VXX as an ETF, and you say, okay, look, VXX is one that we definitely have seen be incredibly low. We've had some of the lowest volatility here over the past couple of months that we've had on record, and it's shown in the fact that volatilities have really been dropping. And you can see that there are downside opportunities to saying, look, even with volatility low, it kept getting low through the first part of September, right? We were in the strong downtrend mode for VXX with both percent R, the acceleration bands, and of course the CCI confirmed the breakout after we closed below that low on the 2nd, to start off the day on the 6th. So from that perspective, you saw a quick downside opportunity, but look at what happened Friday. There's your 1 and your 2 bars outside the acceleration bands. You see, we have not seen that. We got one, and then it flipped back down underneath. We got another one that was right up kind of into it, but no dice. Another one into it, no dice. So those percent R attempts were not getting confirmed by the acceleration band. So on Friday morning, we got that follow through. We got that confirmation. We also closed above that initial breakout bar. And so percent R said, yes, you've got an opportunity here from about the 35.5 the range up to 36, and look at where VXX finished, almost to 39. That was a very large move for volatility. And so, we're saying, look, don't be surprised when you see volatility trend, because when it does get trending, then yes, the fear is on. And this is one thing that a lot of people misunderstand. I believe that we go through these cycles of fear and greed, and so when you're just starting to pile on the fear after such a long period where there hasn't been any fear, there hasn't been any volatility surge, then yes, it can be a pile-on effect. And it might be short-lived. Is it a one-day effect? Could it be a 2 or 3 day effect in the early next week? That remains to be seen. But for now, what we are on is we're on an uptrend until proven otherwise in volatility, which means we're on a downtrend, just like we showed you in the S&P. So these things kind of correlate with the strength of the move, that yes, you're getting fear rising. And eventually that could create a buying opportunity, but not until we actually see that trend in the volatility upside end. Okay, so this is sort of how I layer these pieces together. Now, I promise you as well, look at our latest trading scans. I did one for you on percent R, so I'll show you how we do this within MetaStock in the BTTK Big Trends Toolkit for MetaStock. Now, and then I'll walk through those and then share with you how you can get some more education about these top 3 indicators from us here at an all-time low price point. Okay, so now what I do, I'm a big believer in, I coach a lot of big trend students and folks that have come to us looking for help with their trend trades. Whatever type of trader you are, whether you're a day trader, swing trader, position trader, you can apply these methods, and just it's about adjusting your time frame to then find the really big moves, okay? Because people, when I started BigTrends.com back in 1999, they said, oh, so you're going to talk about mega trends over the next multiple years. I said, no, I'm going to talk about big trends on any time frame. We look at long-term charts, intermediate-term charts, short-term charts. So there's opportunity for big trends. You just have to know where to look as far as how these indicators line up. So I don't delegate this out. I scan this and teach people, and I do these every day. And I'll walk through the charts and I'll point out the key levels and the targets, okay? So where's the retest? How do we get a piece of that move at a respectable entry point? I don't want to chase, because especially when you're using options, you want to make sure that you're using leverage intelligently. So basically what we're looking at here is that we're going to walk you through specific indicators that we found that have an edge. Jeff helped me immensely and worked countless hours setting this Big Trends toolkit up to really give you all the different indicators I found that worked the best for me over the last 25 years of my own trading. And then it tells you, okay, so these are top trades to first consider. It doesn't mean you go and rush in and place all of them, but it gives you a point to start and then to follow through with my teaching and the education about how to use the indicators. Now, the interesting part about this is explored. I did this morning before I came in here, so literally fresh off of the press. And what was interesting is that these are actual percent R buy signals. Okay, so this is percent R. This is the Larry Williams percent R, but adapted to the big trends approach. This is the bull scam. Now, all those ones mean you're getting potential signals. So like Apache announced a big oil find, right? So you're watching, and you see some of the energy stocks are popping up there. There's also like some of the ag stocks like Seed, SEED. I haven't gone through and looked at all these charts yet. I'm just saying this is basically where I start. And you can see, but that's a pretty small list. Obviously, it was a big down day for stocks, so you don't expect to get a whole lot of buy signals when we ran it across all the optionable stocks out there. Okay, but it just shows you, for example, the kind of names that we would start with. These are not recommendations. It's just showing you, okay, look, you can take out of that data where you might look for buying opportunities. But of course, then you look at the selling opportunities, the new shorts, and they're longer than just even the page I can give you, because of course you can see they go all the way down here, and we're only into the G's, right? So you're going through and you're saying, okay, look for which ones might give you new opportunities, and we like to focus on the more active names. So there's a few active names on that first batch of names, but that's just kind of a starting point for how we'll go through and look for these various opportunities. So the principle is that you're going through and you're kind of narrowing your focus. I don't want to scan through thousands or even hundreds of charts a day when I can focus on a handful of, as you saw before, how many was it? Maybe 8 potential buy signals. And yeah, we've got a little work to do to go through. Probably might be 50 or so potential bear opportunities. But actually, when we get into the more active names, I can cross a lot of these off, and we can actually look for probably maybe about 10 I see on that list that are big enough names to follow, because we trade the options on these names. So what I'm looking for is, okay, which ones have enough options activity to really make it worth putting out for my subscribers. And if you're trading it yourself, you should factor liquidity in as well. One of my rules of thumb would be this, you could set these up as scan filters too. I want to see the stock trade at least 1 million shares a day for option traders, because that if the stock's active, it makes it easier for the market makers to hedge. And then as you learn about options, you want to see whatever option contracts you're trading, probably trading an average of 100 contracts a day or more. So that starts to narrow your focus into the really big names. And so, from this perspective, what we do is, I've created all kinds of courses for traders and a lot of very extensive ones, but this is kind of like the best of the best place to start. This is my top 3 boot camp course. Okay, so this takes the top 3 indicators, %R, acceleration bands, and the CCI, and says, look, let me do a featured session course for my coaching students on each of these. And what I did is I archived it, and each one's at an hour plus. Actually, I think the %R course pushes towards 2 hours, and so basically, I think it adds up to about 5 hours of total content off of this 3-session course that you can watch as many times as you want with lifetime access. So I'm a big believer that you get the opportunity here to really not just absorb the information of the lessons I've learned over 2.5 decades, the last 25 years, and actually say, look, you now get a shortcut to say, gee, 5 hours, that sounds like work. Well, when you dedicate your life to something over 25 plus years, I'm still giving you an incredible time shortcut to really get you into the best of the best trend trading techniques I've found that work, and all the nuances to look for, because there's a lot of things that you want to be careful about when you see a potential buy signal and you think it's there, but it's not. So, or you think it's a retest, but it's not confirmed yet. So I give you a lot of these details to walk you through, okay, knowing when to get in and when to get out, and also, more of the tips and tactics as it relates to the types of names that work the best, how these systems will point you to the stocks that you've been missing. See, what I said before about beliefs is, if you have a belief that you should never buy an overbought stock or a call option on an overbought stock, you will miss the best trends that are out there this year, next year, and every future year if you have that belief that you shouldn't focus on overbought stocks. So part of this involves saying, look, do you perhaps need to retrain yourself as it relates to special situation opportunities? I'm not telling you to buy every single overbought situation, because I showed you a bunch where they didn't work, right? I showed you that you have to follow the big trends rules of the confirmation, of the follow-through, to say that now, guess what? It sets it up for future buying. Think about it for a second. Why do you think that happens? Why would it be that that these trends continue? Well, there's probably a fundamental reason, right? There's an earnings-based reason or some other driver, whether it's a management change, a new product coming, or whatnot. But there's also this fact that we all have to remember, which is that institutions are just like you and me. They want to be on the big trends up, and they want to be out before the big trends down. Or if they get caught with their pants down and the thing gaps down, they're going to be unloading if it's a really bad news situation. And let's also face it, institutions have a lot bigger positions than you or me. Whether they're trading $10,000 or $10 million, we're all small fish in the bigger ocean of institutional sharks and whales out there. So the reality is that it's going to take them longer to unwind those trades, or take them longer to build positions on the big uptrends. So that's why trends in motion will tend to stay in motion, because they're going to continue to push in or push out of those trends that are starting to happen. And so that's important, because you realize, okay, that's where the money flow is going from, the bigger institutional flow. That's where you want to be a part of that. So that's what I believe % acceleration bands and the CCI do well, is show you when we're getting that follow through, when we're getting that strong trend, and then how to get a piece of it. You don't have to get all of it. And I think that's where a lot of traders make a mistake of kind of what I would say, is one of the sort of things that cost you a lot of money in your trading is perfectionism. You think you have to be there right when the thing just hit its absolute bottom, and you think if you're not out at the absolute top, you haven't traded well. Well, that's a mistake to believe that. I remember seeing John Bollinger talk at a market technicians conference, and he said that his mentor told him that he was only allowed to pick the exact high and the exact low once in his trading career. He said, well, that didn't seem like very good odds, so he just came up with the bands to get in the general vicinity. So, the reality is that that's good advice, is that if you can just get that sweet spot, just a piece of that move in the middle, that's actually the higher probability move, you're going to actually be a lot happier trader. You're going to be able to take your piece out of the pie and move on to the next one. So you can try to leave the top and the bottom picking to everybody else, and you'll be a lot better off in your trend trading. So basically, this top 3 boot camp, I know Chris should be posting it for you, so you can actually go to that page. You can also call us at our 800 Big Trends toll-free number. Chris is in the office here with me. We're in Lexington, Kentucky. But bottom line is that, yes, we give you all the parameters, Joe, within this training. Let me go back and pick up some questions, too, before I'm out of time here. That Joe says, okay, parameters for CCI and %R. We give you all those parameters in the top 3 boot camp. We give you how to construct it, how you can set it up in your MetaStock platform, and basically how you can then follow these rules of when to get in, and more importantly, when to get out. But it's not just the one time to get in. That's where I think it's an eye-opener for people to say, hey, there are multiple opportunities within this trend to get on at a relatively low-risk entry. And let's face it, some of those are not going to hold, and you're going to then say bye-bye to those trades. The beauty is, if they don't hold, you're out quickly. You're out usually at keeping your stop relatively tight and relatively small loss, versus the opportunity for much bigger upside on your bull and your bear trades. So that's where we're really looking for leveraging that with options. We give you kind of core, what's a way that you could then leverage that intelligently with options as well. Let me go back and see what else I've missed. I know we've got a lot of other great presenters today, so you definitely want to take advantage of really a lot of great training out here. This is, Gulam asked, what's the name of the software? We call this the Big Trends Toolkit for MetaStock. And so from this perspective, we find that it really, I'm a big believer that, some of these indicators I created, some of them are modifications to existing indicators, sort of standing on the shoulders of giants out there. My belief is if it tests well, then I want to use it. And so, some people will say, well, the only indicator you should look at is price action. And I think that's a mistake, especially these days where there's so many whipsaws. You need something that's going to confirm, is this trend move and a valid trend move, what I call a true breakout, or is it just another fake out? I can guarantee you, I think a lot of you have had this experience if you've traded for a while, that it's the fake outs that really damage not just your portfolio, they damage your trading confidence, what I would call your psychological capital. And so your job as a trader is to protect not just your financial capital, it's to also protect and build your psychological capital. Your confidence in your trading, your confidence in your method, and knowing that if it's not right, you don't pull the trigger. So a big part of this is not just knowing when to trade, it's also showing you when to stay away, when to avoid situations until they set up properly. So this teaches you not just technicals, it teaches you patience, it teaches you discipline, it teaches you how to know when to allocate capital and when to back off. Okay, so now how are acceleration bands different than Keltner channels, Jeff asks. So, Keltner's is yet another form of channel. There's a lot of great channels out there, but I found that the way my acceleration bands are, they're actually quite a bit wider than the traditional Keltner channel. So they're really requiring a very strong move in order to get me interested. Because, and you say, well, by that point, haven't you missed it? That's where a lot of people have a fallacy, a belief that's not serving them, of believing that they have to get in right at the low, and believing that if it's already started to move that they've missed it. Guess what? The trend in motion tends to stay in motion. The more powerful the trend, the more it's going to have a sort of a follow-through effect. And that's why I say earnings is my top fundamental that I want to watch those follow-throughs. So like Apple's last earnings had good follow-through. We were able to trade it in our various alert services multiple times and get pieces of that follow-through trend to the upside. So let's see, any other, I've got about a minute left here, let me see, and then I'll give it to Jeff here basically and set it up for our next presenter. Yes, the acceleration bands are plotted around the moving average. So the idea is to actually focus on where you have the expected move happening in between the acceleration bands and the unexpected move that happens outside those acceleration bands. The beauty of the acceleration bands is that they will stay with that new trend longer than most other band or envelope techniques. So that will help you quite a bit. Let's see, did I miss any other quick ones here? Okay, so it looks like, and so how do you find the best oscillator? So again, there's a lot of other oscillators you can put on these trend following techniques. The beauty of this is I've taken classic oscillators like %R and CCI, and I've turned them into indicators you can use to just keep it simple and follow the trend. Okay, so and then know where you hop off, where do you add to a position, where do you, if you missed the start of a trend, how do you get back on one of those retests? So that's what it's all about. So Catherine says, can you purchase this as an installation on one of the other platforms? Basically, we're focused here on MetaStock, and so if you want to get it for the MetaStock toolkit, for our Big Trends toolkit for MetaStock, just either give us a call through the 800 Big Trends number, that's toll free, 1-800 Big Trends on your phone, or you can also email us through clientcare@bigtrends.com. Chris is here to help in those regards, to help you get set up for MetaStock, or if you have other questions about the top 3 bootcamp material. I want to say thanks. I know I'm out of time. I want to hand it back over to Jeff so we can stay on time. There's a lot of great other speakers and presenters here, so do just continue to soak it in, keep making your notes, and like I said, then focus on where you see the biggest opportunity to improve your trading, whether it's you've been missing the strong trends, whether it's been you take too much risk, how do you get back onto a trend within a good re-entry point where you're not taking so much risk. If you want to learn more about how to convert these stock ideas into option ideas, there's a lot of great material here in the top 3 bootcamp. So with that said, I want to say thank you for being with us. Continue to stay with all the great speakers throughout the day, and I'll hand it back over to Jeff to keep us on schedule.
All right. Thanks, guys. Thanks, Price. One of the things I love about Price, I'm just going to go ahead and change the presentation back to me real quick. But one of the things I really like about Price is kind of the mentality he uses about the market, if you would. I remember in one of the first presentations I saw Price do, and Price and I have been working together for a really long time. I would consider him actually a mentor of mine, not only in just trading, but in addition to that, like one of the key philosophies that he uses in kind of identifying when to get in and out of the market is, there's 6,500 or so optionable stocks. So how can I develop methodologies that allow me to focus on really kind of the big opportunities and skip the little opportunities? Price always says I'm willing to step over those opportunities that are the smaller ones, And I really want to look and just find those opportunities that are kind of perfect setups and just kind of really, really focus in on those. And all of the kind of methodologies that he uses are built towards that kind of mentality. So it's a really, really good methodology and a really good system to use with what he's doing. Price, what I would say is his big trend toolkit that we developed for MetaStock is one of our most popular add-ons. We took his book, Big Trend, I think it was Finding Big Trends, but we took all of his Big Trends in Trading.
Trading, yes, thanks.
Thanks, Bryce. But we took all of his methodologies. I mean, he talked a lot about acceleration bands, but in addition to that, he's got like efficiency ratios and just a lot of different stuff. And what we did was we packaged it up into a scan or into a methodology in MetaStock. And here's just a list of all the indicators that we added. Here's the systems that are included, his 80-day Bollinger Bands, his acceleration bands, his DMI difference, his efficiency ratio, his percentages above the 200-day moving averages. All of these indicators and all of these methodologies and all of these systems are included with MetaStock as part of the Big Trend Toolkit add-on. And I just want to kind of give you a real quick idea while we're getting in here. This is just a view of his acceleration band system. The acceleration band system, what we did is I took actually a look at all of the stuff that he was teaching, and we tried to build some pretty specific rules that you could just follow. So you'll notice we're kind of giving you, back here on Google, an opportunity to go long. In addition to that, it's telling you exactly why you're getting that particular long signal. But in addition to that, we kind of give you some pretty specific advice on what you should do with that. You could buy the stock. You could consider buying a call option in the second expiration month. If you're extremely aggressive, you can look to do this. You should look to exit the position when this happens. And so it's going to help you in terms of the understanding of the system. I wouldn't call it a replacement for the education that Price offers. But in addition, it's going to be very, very helpful for you as you're kind of getting these positions to have this kind of feedback on a real-time basis as you get this signal. Of course, scanning is part of it. You can go in and you can run the exploration for any of those systems. I'll show us scanning here after the next speaker. We're kind of running a little bit in time. So anyway, here's all of the systems. Again, he's been rated a top market timer for a many number of years. Just such a great trader, and I really appreciate Price. His friend Price, he's a great guy. So if you want to get the Big Trend Toolkit, you can get it for a one-time cost of $499. It's $399 here as a Summit special. That will include a subscription trial. We're also going to include plenty of training on MetaStock. I'm running a boot camp on how to use MetaStock on September 20th, 2016. Give us a call at 800-882-3040 or visit us at, you can chat online with us right now at metastock.com/sales chat. We're going to be talking about a number of different add-ons today. Basically, we're going to do a bundle offer. If you buy one, you're going to save $100 on them. If you buy two, you're going to save $125. If you buy three or more, you're going to save $150 each. Again, you get 2 years of stocks and commodities included with that. You get a trial to MetaStock as part of that, and you're going to get the boot camp that I'm personally going to run on the 20th of September. So. I want to throw a shout out to our sponsor, Stocks and Commodities Magazine. Again, we really appreciate kind of the help that they've done. They've been doing the summits ever since number 1. I think we're on number 7 or 8 now, and they just keep getting better. They just keep getting bigger. And a lot of that is you guys coming every single time we do it. I really appreciate how